We're going to go ahead and get started. It's 7:01, and I know people have kids and extracurricular activities. Plus, we're recording this for YouTube, so we want to go ahead and get started into week 3 of our 52-week home ownership and home buyer Wednesday webinar. So a quick review of week 2, where we learned about the concept of being ready to the evidence of being ready. So we moved from one phase to the next. We talked about what lenders need to see in order to make them say yes. Also, in last week's class, we sent out the mortgage readiness checklist. I will make sure you have that if you didn't get that. And then also, today you were asked to come to class with all 3 credit reports: Equifax, Experian, and TransUnion. And we told you that you could get those free, the reports only, at annualcreditreport.com. But if you wanted your scores, and we highly suggest to get the scores, it will cost you $29.95, so just under $30. And then you can cancel, but you'll have access to those reports for 30 days to get all of them printed out. And so it'll make it easier as we go through and identify the things that are holding your scores down. So that was a quick recap of week 2. We are into week 3, and we want to learn about the big dogs of credit. And as a matter of fact, all things credit related. So we know, most people know rather, that there are 3 credit bureaus: Experian, Equifax, and TransUnion. But did you know there was more to the credit game than just these big 3? Okay, so if you didn't know, your credit doesn't just live in those 3 places. Mortgage lenders often look at secondary databases that can still stop you from closing, even when your scores look good, even when your income is good. Personal story, I had a buyer a couple years back, and her credit was awesome and her income was even more awesome. We were like 2 weeks away from closing, and something popped up on CoreLogic. Well, what that something was an account that was linked to a Chase card that she had let someone use, and that amount was $9,000, just under $10,000. So she had to pay that account off, or her transaction would have fallen through and she wouldn't have been able to close on that house. So in addition to Experian, Equifax, and TransUnion, there are major secondary specialty credit bureaus that lenders use. And in most cases, those smaller secondary specialty credit bureaus, they feed the big 3. They feed those TransUnion, Equifax, and Experian scores and reports. So why this matters for home buyers? Well, a borrower may repair their Experian, Equifax, and TransUnion, but still get denied due to something popping up on their ChexSystems, LexisNexis, or CoreLogic. Mortgage lenders use multiple data sources, not just FICO. And here are the major secondary specialty credit bureaus. So you have Innovis, ChexSystems, Early Warning Services, LexisNexis Risk, CoreLogic, also known as Teletrack, SageStream, and Factor Trust. Those are some of the bigger secondary bureaus. Now, your credit scores are made of 5 categories. Your scores can differ across the bureaus because not all information is reported to every credit bureau. So creditors have to pay when they report stuff on you. And as a result, sometimes they don't report it across all 3 of the big bureaus. I want us to do a little math right here before we dive off into credit reports. Before we go another further, I want us to understand scores. So there's a little bit of people are just kind of not on the same page. There's a disagreement with what minimum credit score you have. Okay, so I'm gonna go ahead and just settle it. I've never seen anybody with a credit score of 300. Typically, they said that everybody starts with 350. But let's just say everybody starts with 300. So the most we know that FICO will give you is 850 points, right? Okay, so that being the case, if we start with 300 and 850 is the max. That leaves 550 points that we need to try to get to, right? Out of these 5 categories. So let's start with payment history. So payment history is 35%. So if we say 550 at 35%, that's 192 points, 192.50, okay? If we start with, so that's payment history. If we look at amounts owed, that's 30% of our scores. So we're gonna get into that big number later as well. So 550, and we multiply that by 30%, and that gives us 165 points. All right. So that being said, there's 192.5 points that we can maximize in that category of payment history and 165 points in amount owed. So 550 again at 15% is 8250. So in that category, length of history, we can max out that category by 82.5 points. And then you have new credit, which is going to be 55 points, and credit mix, which is another 55 points. So we have to make sure we understand and make this credit wheel our friend before we can figure out where we need to start disputing what information in. Okay, so if we look at ways to improve our scores, because we just learned about the wheel, we're going to go more in depth. All right. So if we're talking about the utilization hack, a lot of people go, well, how can I raise my scores really fast? Well, so first, like I said, you got to understand that credit wheel, and then we have to attack each category. So the utilization hack, which is 30%, this is how much of your limit you use for credit utilization, accounts for 30% of the credit score in this category. So pay down your credit card balances to below 30% of the limit. Ideally, you want to pay down those credit cards, keep them paid down below 10%. But I know sometimes when we're home shopping, we need every dollar we can get. So just keep it below 30%. Here's a pro tip. Make a payment before the statement closing date of your credit card, not just the due date. So the due date, you want to make sure you get it. But in order to get the statement closing date, you can look on your credit card statement, but you also want to call them to just say, when is the closing date? That way you're assured that you've made another payment before that statement closes. And that is what's going to report on your credit report. Because when people try to say and try to beat the system or game the system, if you will, they'll say, okay, I charge my credit card up and I just pay it off at the end of the month. Well, that could possibly be hurting them, because anytime in the month that creditor could report to the credit bureau. So you want to try to make sure that you're not gaming the system, that you're utilizing this information to best propel you to a higher credit score at all times. And then also you want to make sure that as you are making those payments, you're making them on time, you're making them preferably before the due date. And then because when a mortgage lender looks at you, we want to paint a perfect picture. So if your credit limit on a credit card is 1,000, and let's say you charge 900 every month, but you're like, you know what, at the end of the month, I pay it back. Well, it doesn't matter. That 900 still reports to the credit bureaus. It's going to say high credit. Then it'll tell what your balance was. Then it'll tell what your limit was. So because you were out of whack with your 30%, you're not giving the best picture to a lender that you know how to manage your money. So if you stay 30% or below, a lender feels comfortable that you can manage your money. Even, okay, I'm giving them this big mortgage amount, but I know I can see on their credit cards, they can run this card up to 10,000 or run this card up to 5,000, and they haven't. So we have to make sure we're painting a really good picture. Another quick fix to improve your credit is to request a credit line increase. So let's say you have a credit card that has $1,000 credit limit, and we already talked about keeping your scores below 30%. Let's say you have a $300 balance and the limit on that card is $1,000. Your balance is $300. So what you're going to do is you can call the credit provider, the creditor, and say, hey, I've had this account for a while. is it possible for me to get a credit line increase? So let's say they push your limit up to 2,000. So now you're well within that, that $300 is well within the 30%. And you've given yourself more available credit, so that makes your scores go up. And now I do want to caution you that if you are choosing to go this route, it is possibly a hard pull. So you want to ask that question when you call for a credit line increase. Will it be a hard pull? Because if it is a hard pull, you're going to see a dip in your score. So you have to figure out if that outweighs, that temporary drop outweighs the benefit of getting a higher limit. The third way to improve your credit is the Experian Boost. So Experian Boost tracks rent, utilities, cell phone payments, and it helps consumers build credit with non-traditional data. That's one of the tools that we have today that we didn't have back in the day. And then the easiest and most popular is to become an authorized user on someone's account, so piggyback off of them. Now, this is highly effective for those with thin credit files or for young consumers or older people who didn't start obtaining credit until later on in life. The advice that I would have for you is have a family member or a friend, someone that you really trust, that has a long history of perfect payments on a card and low utilization to add you as an authorized user on their oldest card. The benefit of this is the entire positive history of that card is transferred to your report as well. So they still get it, but it's reflected on your report. And almost immediately, you're going to see a boost in your scores. When you're asking this favor, please tell them, I don't need the card. I just want to use and piggyback off your good credit history with that card. Now, if they have a high utilization, that's going to hurt you, because when you're applying for a mortgage, you want your debt to be down as much as possible. If they've been late within the last 24 months, don't ask them, because you're going to be inheriting the bad stuff that comes with the card. So those late pays, you'll be getting that, and it'll hurt you more than it helps you. True story. I opened a Target card for my daughter, for me, when she was 1. But when she turned 16, I added her to that card as an authorized user. So today she's still on that card 30 years later. And that keeps her credit scores higher than someone in her same age range, because she has 30 years of credit history, right, that she borrowed from me. Okay. So again, going back to the payment history, which is the foundation, that's 35%. This is the most critical factor in all of the credit wheel categories. It tracks whether a consumer pays their bills on time. It includes payment on credit cards, retail accounts, installment loans like car and student loans, and mortgages. A single payment that is 30 days late can drop a high score by 100 points. So it is so important to pay those credit cards, those payments, all of your creditors on time. However, just being late by only a few days usually only results in a late fee from the bank or the creditor. So if your account is due on the 21st and your payment is due on the 21st and you don't pay it till the 24th, well, you're just late with them. You're just late with that creditor. You're not late where it's reported on the credit bureau until 30 days. Okay, so it hits your credit report once it passes the 30-day mark. If you miss a payment, make sure you call immediately before you hit that 30-day window. If you hit a bump in the road where you're having some type of financial difficulties, it is always best to call your creditor and get them on your side. Let them know. A lot of times there are a lot of programs that they can extend to you to help you out. Sometimes they can even say, we'll waive this month or a couple months and we'll start over next month. So just have those conversations. Don't try to dodge those calls. The amounts owed. So the utilization, again, we talked about the 30%, the fast fix. So just a little bit of in-depth information. So this isn't just about the total dollar amount. It's about the ratio of debt to the total credit limit. If you have, like our example was earlier, if you have $1,000 limit and you owe $900, you have 90% utilization. And this tells the lender that you are maxed out and high risk because you do not know how to manage your money. This is the only category that can be fixed almost instantly. Okay, as soon as the balance is paid down and the bank reports it, usually within 30 days, your score jumps. So keep utilization under 10%. But like I said, for the best score to get the most points in that category, you want to aim to stay under 10%. And then length of credit history, 15%. This is the fine wine factor. Lenders want to see that a consumer has successfully managed money over a long period of time. It looks at the age of the oldest account, the age of the newest account, and the average age of all the accounts together. Closing an old unused credit card can actually hurt your score because it lowers the average age of your credit history. So keep your oldest accounts open, even if you don't use them, to keep that age working in your favor. So for example, if you are, just say for the sake of easy math, 28, and at legally you can start obtaining credit at 18. So when they look at your credit age should be not average, but your credit age, they're looking at an age of 10 years. And if you have 10 years, then you get the full points in that category of length of credit history, right? If you don't, then you don't get all of those points, all right? And then the credit mix we talked about, this is the diversity factor. Lenders like to see that you can handle different types of debt. So there are two main types, revolving and installment. And revolving is credit cards. And it's revolving because the payment changes depending on the balance. So it revolves. Installment are fixed loans like car loans, mortgages, student loans. They're the same payment every month until you have it paid off. If you only have credit cards, you may have a slightly lower score than someone who has a credit card and a small personal loan. But don't run out and get a loan. Let's have a conversation to see if that helps you. We can put you in a scenario to see if that's going to help you. Sometimes if you are 6 months or longer outside of a purchase, then that could help. And that's usually advice that we give, but don't do anything until we have a conversation if you're trying to raise your score. And so that is the 10%. So that's the 55 points. If you have an installment loan and a revolving account, then you're going to get those full 55 points. And then new credit. New credit, it does include inquiries. And again, that's another 10%. Opening too many accounts in a short period of time makes you look like you are credit hungry or financially desperate, more like pick me. So again, this category includes hard inquiries. When a lender pulls credit for an application and the age of the most recent account is open, they're able to see, okay, they had an account that they just opened 30 days ago. They're going to want to know, especially when you're applying for a mortgage, did you get credit? Was credit extended to you? Is there a credit account attached to this inquiry? And you have to fill out letters of explanation for those inquiries. Multiple inquiries for the same type of loan, like a car loan or a mortgage loan, within a 14 to 45 day window are usually treated as a single inquiry. So the consumer isn't penalized when a creditor is looking at it, but your scores go down. So keep that in mind. I always like to tell people, no matter who it is, if you're getting a car loan, try to go through your bank, even if the interest rate is a little bit higher, slightly higher, because you want the key to this whole thing. I'm gonna give it to you right now, is building relationships with lenders, right? So if I go get a car and I get my car financed through Acura, girl, Acura don't have credit cards. Acura don't have mortgages. Acura has my car, right? They have that car loan. I'd rather give that to my bank, or I'll get it through Acura and then I'm going to have the bank go and refinance it at some point. Because I'm trying to build a relationship with my bank. So when I go into my bank, I can ask them anything and typically get it because I have a history with them of loans and repayments and all those things. So don't open too many accounts at one time. Try to space them out at least 6 months. So here, if you haven't done so already, here's where you can get your credit report and It's annualcreditreport.com. So when you go here, you'll click here, request your free credit reports, and then it'll take you to this screen, and you're going to request your reports one at a time. So you're going to do one and then the other and then the other. Rinse and repeat. You're going to repeat this step for each credit report, which is why I say you need to make sure you have plenty of paper and ink in your printer, because you're going to be printing out those reports, and reports can be very thick. Okay. So make sure you have a lot of paper there. And these are the things that you're going to need as you are disputing your errors on your credit report. You're going to need envelopes. You're going to need your credit reports, your social security card, a valid driver's license, or you can use a passport. You're going to need some type of calendar to keep up with the dates. And then you can also use your phone, and you're going to need a highlighter and a bill that has the address on it that you live. So if your driver's license address is different because you haven't changed it and you moved, you're going to need a bill. Still send both, but you're going to need a bill that shows and proves that you live at that address. We're going to send everything certified, and this is what you'll get from the post office. Okay. All right. So here are the rules of the game. We want you to stop right here because this is important. Please do not call these people. When I say these people, I'm talking about the credit bureaus. Do not call them saying, I want to dispute everything on my report. Also, do not dispute everything at one time. There's a process. There's a system. There's a method to the madness. You don't want to dispute everything at one time, because the credit bureaus will mark your disputes as frivolous, and they just won't put action behind it, or it'll be really, really slow. All right. So you are going to dispute your personal information first. Those are going to be your first disputes that go out in the mail. Okay. And then 2 weeks later, you're going to follow that up by disputing inquiries that aren't tied to an open account. So if you applied for Ashley store furniture card and you got the account, you got approved for an account, you're not going to dispute that inquiry, because what that's going to do is set off alarms that there is some type of identity theft or fraud associated with your account. So you only dispute inquiries that don't have an account attached. So if I didn't get any credit, if they didn't approve me, I'm taking them off. Okay. So you start with your personal information first. 2 weeks later, you are going to dispute the inquiries. And this is where these come in, these calendars, because that's where you're going to put everything down. And then 2 weeks later after that, you're going to dispute the accounts. Okay. So, and when you get to the part of disputing accounts, you don't want to dispute more than 3 accounts at a time. So if you have 6 collections, do not hit all those collections up at one time. This is why we say credit repair takes time. It's not an easy fix. It does take time. Okay. So you're going to dispute no more than 3 negative accounts at one time. So like I said, before we look at and dive into the late payments and the collection, but we need to make sure that the credit report that you're looking at actually belongs to you, and that everything on there actually belongs to you. Okay. So incorrect names, addresses that are attached to a negative account that don't belong to you can prevent your score from improving. Now, I'll give you a little behind the curtain. This is why it makes sense to dispute your addresses and your names first, because if there were accounts that were attached to DAPHANIE, okay, DAPHANIE, that ain't me. Okay, I don't even know how to pronounce that. But if there are accounts that are attached to that, now I can dispute those accounts, because I don't know who that girl is. I don't care what it is. I sit before you today as someone who has no collections on her credit report, but I am by far not perfect. Okay. I am very imperfect. I have accounts. Ain't nothing showing on my credit report. I'm just telling you that. Okay. So there's that. You should also, so you're going to check your legal name, make sure your spelling is correct, because again, DAPHANIE, I don't know who that is. You're going to check all of your aliases, because sometimes they'll have me down as Miss D, D Brown, My legal name is my legal name. It is what it is. You're going to check your date of birth. You're going to look at addresses current and previous. You're going to look at the employer names because they have all that on there. And you're going to flag any misspellings of your name, any old addresses that you don't recognize, employers that you've never worked for, and addresses tied to collections or charge-offs. Because as you start disputing, when you start disputing, if Equifax is calling Dillard's and saying, hey, Dillard's, D Brown is, or Daphne is disputing this $300 y'all say y'all owe her. I'm sorry, Pally Roll. True story. Daphne is disputing this $300 that y'all say she owes. They pissed me off, so I didn't pay it. They're going to say, well, okay. Well, yeah, DAPHANIE she does owe us, right? They're going to submit this. Well, DAPHANIE is not me. So if they're not reporting it in the correct name with the correct spelling, goodbye, get off my lines, and that has to come off, okay? And it did. So you want to make sure you look for all of those things again, and it's important to dispute with some order, right? Everything needs to be done in decency and in order. Personal information does not directly affect the score, but it absolutely impacts what data is allowed to report on the reports. So just as I said. Now, step 3 is we're going to highlight questionable accounts, late pays, collections, charge-offs within the last 24 months. What you don't want to do is go and unearth the devil, okay? You don't want to wake a beast, okay? Here's the thing. If there is an account on your report that is 4 years old and collection efforts have ceased, you don't want to go start reporting it, because what's going to happen is they're going to start knocking at that door of this sleeping giant. Hey, Daphne's disputing this. And so what happened is this beast has arisen, and they're going to now walk through my current door where I currently live. So what you've done is you've taken that old account, you've unearthed it, and now the process starts all over again. Now, if it's something that's 24 months, 2 years or older, with the exclusion of bankruptcies, like we said before, mortgage lenders are looking for 24 months. What have you done for me, for yourself, in the last 24 months? Okay. So if you've shown that, yeah, I had a hiccup 3 years ago, but the last 24 months, baby, I've been doing it. I've been doing it and doing it and doing it well. They're going to say, okay, well, that's what we're looking for. We know people fall down, but they've gotten back up, dusted themselves off, and the last 24 months, they're good. So I have seen people dispute old accounts, and their accounts had pretty much kind of, the credit reports had pretty much kind of buried that and didn't stink as much. And they went in and unearthed it, and the stink was brand new and fresh again. So you don't want to do too much on older accounts, especially accounts older than 2 years. What will happen, I'm not saying that lenders don't see it. I'm saying they're not focusing on it. It's here, but I'm not focusing on it. So if it's a $4,000 account from 3 or 4 years ago and it's a collection, what they're going to do is they're going to set aside in your debt to income, your debt, they're going to put 5% of that total debt as part of your debt. They're not going to consider the whole thing because it's old. And that way, if they come back, the account comes back and they say, we want you to start making some payments, they've already taken into consideration 5% of that account. So that's that. And then, so we're also going to then identify which category on the credit wheel, the damage is doing the most hurt to you. So if it's a late pay, then of course it's going to be payment history. We're going to identify it and tie it to payment history. If it's credit cards that you owe more than 30%, it's going to be tied to this. If it's inquiries, it's going to be tied to this category. Okay. So you want to make sure we identify that. We'll get more into that next week. But when you're looking at inquiries, since we just talked about inquiries, you want to make sure they're inquiries that you don't recognize. We want to dispute inquiries that are duplicates from the same lender. And we want to look for inquiries that are tied to incorrect names or addresses. I once Had a client who literally had 138 inquiries on her credit report, all from car dealerships. So that was a lot. That's why I say go to your bank. So now disputing hard inquiries has to be done with caution. So again, we're going to dispute, the duplicates and the ones that are tied to incorrect information. If you dispute inquiries that are yours, again, it's going to set off red flags. If you've been a victim of identity theft or fraud, you're going to dispute inquiries that you have no knowledge of. If there are inquiries that you never authorized, you're going to dispute those. Do not dispute inquiries simply to gain points, okay? You have to know what you're doing. You want to safely dispute, and the language that you want to use is, I am disputing this inquiry because I did not authorize it. Please remove it from my credit report. You don't have to get fancy. You don't have to use big words. You don't have to do all of that. It's real simple. And a follow-up email is going to have some dispute letters for you to use, some templates. All right. So it is very important that I warn you that, again, I've said it twice now, it's my third time. You can raise red flags and delay your mortgage underwriting if you dispute inquiries just to be doing so. So mortgage specific rules, very important. Do not freeze. Do not freeze while you are under contract, while you are waiting to close. Do not freeze your Experian, Equifax, or TransUnion until after you close. So if it's frozen, a lot of people have it frozen because of all this identity theft, but you're going to have to open it up so that the mortgage lender can pull your credit, and after you close, you can freeze it again. Now, secondary bureaus that we talked about, you're going to get all of those reports first. You're going to request all of your reports. It's free. You're going to get all those reports first, and then you're going to freeze them. Okay, because those small bureaus feed the big three. Okay, so if they're frozen here, then who's verifying this? Nobody. So your chances of getting things deleted have just gone up. So for your convenience, I've already looked up and given you the addresses and phone numbers for the big three and then the secondary credit bureaus. Now, I have done it. I have other people that I know have done it. Call these numbers to dispute inquiries. You can, and it works sometimes. It don't always work. It's a it's a tedious process. It takes a lot of time. Okay. My go-to is snail mail. That's just it. So things to remember: credit repair takes time. You didn't get toe up credit scores overnight, so they won't get fixed overnight. The key is to be organized, committed, dedicated, and determined. So again, when you're sending things off, make sure you put it on your calendar, whether that's a hard calendar, paper calendar, or in your phone. Sent inquiries to TransUnion on this day, and they have 30 days to respond to you. And because you're getting them certified, if they don't respond, because sometimes they don't, you'll then send a letter and say, I sent this on this date. Here's who signed for it. It wasn't, I haven't gotten a response. So here's my letter demanding that you remove these accounts. Okay. So some of the questions that we've gotten when we put this out, some frequently asked questions. Do names and addresses impact your credit scores? Not directly, but incorrect personal information can allow negative accounts to attach to your report, which does impact your scores. Should I dispute old addresses? Yes, if they are incorrect or tied to negative accounts. Accurate past addresses are fine to leave. Is it better to dispute online or mail? So we just talked about it. I didn't go in too much into it because I knew we'd come back here. Certified mail is best for serious disputes. Online disputes are faster, but they limit your rights. So snail mail preserves more leverage. How long does it take to improve my credit score? Some changes take 30 to 60 days. Other can take several months. Credit improvement is a process, not an overnight fix. We talked about some of the fast things that you can do, which is paying down debt, getting inquiries removed, erroneous inquiries removed. Those are things that's fast to do. But collections, that's not an overnight fix. Should inquiry disputes be sent certified mail? Yes, we said in the last slide. It's the best practice because it creates a paper trail. It starts the 30-day investigation clock. It protects consumers if a bureau claims they never received it, which sometimes they have done. And it also adds credibility if escalation is needed. So when certified mail is especially important is when you are a victim of identity theft, when there's unauthorized inquiries, and when you're disputing personal information. So it's not required, but it does protect you, okay? When credit matters, documentation matters. Should I dispute online? We already said no, but it's faster. Should I freeze or dispute my secondary reports? So the simple rule is to dispute it if there's incorrect information, if there's fraud or identity theft attached, or if there's a mismatch, if there's incorrect banking records, or if there's unauthorized activity. You're going to freeze it if there aren't any current issues, if you're not applying for credit immediately, and if you want to prevent new data from reporting, because you don't dispute clean reports, right? You freeze them so you can keep them clean, because I cannot tell you how many times someone is purchasing a home and something pops up on their credit. So if you freeze these smaller ones, is unlikely to happen, right? So here's some resources for our clients that have gone out. And if you haven't received them, you should be receiving them. You're going to receive this in the email that follows this webinar. And this is Hidden Secrets. It's going to be a breakdown more in depth over this webinar. Since we only have a few minutes on this webinar, it goes into more depth in this guide. And then this mortgage readiness checklist went out after last class, but I'll be sending all of these again in an email. So I don't want to bombard you, but I'll make sure you guys don't miss anything. So let's connect. On Mondays, we are going to host a chat every Monday. I'm also going to be posting stories, because if you're someone who is looking to purchase, but you're like, I'm just getting ready to purchase, but I want to figure out how to save some money, I'm going to show you and walk you through how I trim the fat every year off of our household budget. I'm going to start with cell phones. You can call your cell phone company. They can give you new pricing, especially if you've been with them for a long time. You can call your utility provider and you can ask them to give you a rate that charges less per kilowatt. All of those things I'm gonna walk you through what I'm doing and the script that I use. And $20 here, $15 here, $10 here, they all add up, and it's more money that you can save towards that. Now listen, if we save you $150, don't be like, "Whoo, I got $150." No. That $150 each month now goes into a fund for your house. But we're going to show you how to save that money. Coming up next week, we want you to bring your questions. It's going to be our credit mastery, the action plan. Well, we're going to get those reports that we pulled up last week. And if we didn't, you have another couple days to do that. And we're going to go through some collections. And I'm going to show you what to look for and what to dispute, okay? So I'll be showing you that. So now that you know where your credit lives and what's holding it back, we'll talk about what to fix next, what to leave alone, and how to raise your score without doing damage. I want to let you know that I am not a licensed credit counselor or a mortgage lender, but I know a couple things because I've been here a little bit, okay? So here is a QR code if you are looking to connect and want to schedule a buyer consultation, seller consultation, or just want to talk. Say, D, I want to get started, but I don't know where and how. All right. Does anyone have any questions? I know that was a lot. I appreciate your time. Please let me know if you have any questions. You can call me, text me, email me, and I will do my best to pick up your call and give you an answer for whatever question you have in regards to real estate. And I want you to make sure that you are being a good friend, a good cousin, a good relative in general. If you know someone that needs this information, that wants to know, I want to know about real estate, I want to get started, I want to buy a house, I'm thinking about it, I don't know where to start, let them know that there's a channel out here. There's a webinar that is helping people understand real estate in the most basic terms, and invite them here because I love to see them and answer any questions that they may have. But until later, I want you guys to always remember that I am always ready and willing to enable you to to find your way home. Till next week, guys. Bye-bye.
Be sure to follow me on all of my social media platforms as I post different content on each of the platforms. Additionally, make sure you subscribe to the channel and check out our playlist for the 52-week series so you don't miss a thing.